This is your LMAX exchange technical update for Tuesday, April 18th, 2017. Euro dollar. So the euro is in the middle of a key range now between 105 and that recent 2017 high at 109.06, and the market is now trying to figure out whether it's going to see a broader bearish resumption, which could ultimately result in a drop back down towards a retest and break of the 2017 low at 103.41, or if this is a market that's putting in a more significant longer term base with a higher low sought out at 105.70, that recent low above 104.95 ahead of the next major upside extension back through 109.06. This latest minor recovery that we're seeing does suggest that we could be seeing a higher low, but the market will need to establish a daily close back above 107 to strengthen this prospect. Inability to establish a close back above 107 will keep the pressure potentially on the downside, with a break back below 105.70 to open the door for a retest of 104.95. Sterling dollar. So cable is traded back into this key resistance zone up towards the 126 to 127 area. Overall, while the market holds below the December peak at the December 2016 peak at 127.75, the pressure does remain on the downside, with the market confined to a bearish consolidation and risk for another topside failure up into this resistance zone ahead of the next major downside extension, potentially back towards that 2017 low from January at 1987, which guards against the 2016 plus 30-year low from October 2016 at 118.40. Again, only back above 127.75 would compromise the overall bearish outlook, and rallies up towards the 127 area should be well capped. Dollar yen. So dollar yen continues with its breakdown. The market has most recently dropped to a fresh yearly low just shy of 108, and there is still room for additional declines towards a measured move objective at 107.60 following a period of 400-point consolidation earlier this year between 11.60 and 15.60. And so again, the 107.60 400-point measured move is now in sight, and there is room for deeper setbacks. Any rallies in this market should be very well capped, ideally ahead of below 110 on a close basis, while only back above recent resistance at 112.20 would take the immediate pressure off the downside. Euro Swiss. So although Euro Swiss has seen a nice little bounce over the past session, the market should be very well capped into rallies as it continues to be confined within a broader downtrend. A lower top is now sought out at 108.26, which will be confirmed on a break back below the 2016 base at 106.24, exposing a drop down towards the 104 area. Aussie dollar. So Aussie rally should continue to be very well capped, with the market showing signs of topping out after once again stalling up towards medium-term resistance in the 78 area. At this point, look for a break back below 74.75, that recent low that we've seen, to confirm the bearish outlook and accelerate declines potentially back towards the 70 area. Dollar CAD. So dollar CAD setbacks continue to be very well supported, and overall this is a constructive chart which favors the formation of a higher low and fresh upside extension eventually back above the multi-day high at 135.99, exposing a move towards 140 further up. Any setbacks should continue to be very well supported above 132.24 ideally, though ultimately it would take a break all the way back down below the 2017 low at 29.69 to compromise the constructive outlook for dollar CAD. Kiwi dollar. So despite a little bit of a bounce in Kiwi in recent trade, this is a market that also is showing signs of topping out in 2017 after the market stalled ahead of 74. Any rallies here should be very well capped now, ideally ahead of 72, ahead of the next major downside extension back below medium-term support at 68.62, which exposes 65 further down. SPX 500. The S&P 500 has pulled back from recent record highs, but the pullback has been mild thus far, and while the market holds above 2320, the pullback is classified as a minor correction ahead of what could be a bullish resumption towards fresh record highs. At the same time, if the market does continue to trade lower and breaks back down below some key support around 2320 from that low that we saw on the 27th of March, that would be a significant development and could open the door for a more significant downside towards a measured move initially into the 2270 area. So 2320 is the key level to watch in the S&P 500 in the sessions ahead. A break below would signal a more significant structural shift, while inability to break below will keep the pressure on the top side. Gold. So despite seeing a little bit of a setback in recent trade off that fresh yearly high that was seen just shy of 1300, the market remains very constructive overall as it continues to show signs of basing out off the 2016 low just shy of 1100. The market has since put in a series of higher lows and higher highs, with this latest break above 1265 opening the door for the next measured move upside extension towards 1335, just shy of the 2016 peak at 1375. The break above 1265 has also confirmed a fresh higher low at 1195. Any setbacks from here should be very well supported, ideally ahead of 1230, with only a break back below 1195 to compromise the constructive outlook for gold.